From this data, we can see 54% of AMC trades have executed in the door pools so far today. But this might have changed a little bit because this tweet is dated from 6 hours ago. But especially given the price where we closed. But it doesn't change the fact that we are seeing a decrease in the volume through the door pools so far today. But what is interesting about this is the same amount of shares it took, or it usually takes, for the hedges and the short sellers to bring the share price down, it's not actually having the same impact on the share price. Remember 2-3 weeks ago, especially after earnings, we were up like 12% pre-market and we actually closed 7% on the red. But now things are changing, because even on a day like this, the same amount of effort it will take the hedges to bring this down, it's not working. Either the stock is flat like today, or it's green, and it's been green since the 2 or 3 weeks at least. Why? Because I think this is a result of the buying pressure, right? The buying pressure coming from institutionals, but also coming from a type of investors that have the same nature of technology that, someone like Citadel will also have. Because you remember, we have Renaissance Technology coming in and actually increasing to 300% his position on AMC. We saw that from the last 13F filings for the last quarter. Remember that Renaissance Technology fund, it's one of the smartest and successful hedge funds on the street. The fact that they entered the play and increased the positions, as well as a lot of other banks, you can see here from the latest filings, you have these funds from the Russell 2000 index increasing significantly the amount of shares that they have. But you also have new positions, not as big, from BlackRock, for example, and another increase here. But when you do have a company like Morgan Stanley buying up to 1.2 million shares outside of the 13F filing for the quarter, it says something, all right? It says that there is a battle actually taking place on this play. Citadel is using their algo to play with their emotions. But so far, we've been evolving and getting a little bit, educated and mature and numb to the psychological welfare that's been going on from Citadel or the other edges. Now, when you do have the same type of algo, but coming from someone who's actually against the short sellers, actually buying and increasing their positions, it will make sense. It will make sense that things are not working the way they used to for the hedges. So at this point, it's really to see if this will be sustainable enough. But I think it will, because not only the professionals from the options market, which we see a huge spike in volume, are telling us that the options price are implying that this is not going away anytime soon. By anytime soon, I mean by going away, it's the retail continuing to sit and buy heavily these stocks. All right, so pretty much this is not a storm. This is not just a temporary thing. It's a trend that is continuing and that we've been seeing to install itself since the last couple of weeks. All right. So that being said, the big question is, how long will the hedges last? Because we have new big players, new gorillas, new other funds in the play, actually pushing to see the unimaginable and inevitable highs they're expecting for. So I guess it's just a matter of time. The time, it might take few other weeks, it might take few other months, but the real question is, what is the price you are willing to sell?